All right, traders, the question is, are we going to see a Santa Claus rally heading into the end of December where the bulls begin to take control? Or are we going to see another micro bull trap created where SPY then cracks the previous support levels? I'm going to show you exactly how to determine if the bullish rally is going to occur, where to be buying call options. I'm also going to show you how to determine if a bull trap is created and where to be buying put options. This is going to show you exactly how to trade the best setups at the best prices. So in terms of yesterday's video, before we get into the new the new updated analysis, what you need to understand is in terms of what was stated, we made it very, very clear if the previous closing price, $380.02, reacts as a resistance level, we're going to try scalping puts. And I also said in terms of price targets to sell and to exit at yesterday's lows, which was at $378 level. And I also said if $378 does end up having a massive sell-off, then you can try puts again. If it spikes back up after having a massive sell-off, you can try puts at 378. Well, that massive sell-off never occurred. But was there an opportunity for puts at $380? I will say there was an opportunity, and I'm going to explain it to you. And I'm also going to show you how to determine when the bulls take control, because that was determined into yesterday's video. So in terms of that opportunity, you can visually see in the pre-market, there was several opportunities where SPY topped out at the previous closing price and it kept selling off. So that's bearish. You can see right here, it started forming lower highs right at the previous closing price. So the deal was, the strategy worked. SPY went green to red in the pre-market. The problem was it didn't fill the gap. So if you were to buy puts right here, was it looking bearish? Was there bearish confirmation? Yes. It was sitting at major resistance, forming trend reversal candlesticks and forming lower highs. There was a reason to play puts. The only issue with doing that is the gap did not fill. The gap did not fill at 380.02. So what ended up happening was it had a partial gap close reversal, meaning it partially filled the gap. Then it began to have a reversal. If you're going to do that, make sure it's at a much better resistance level and make sure your entry is super close to the gap fill level, because you're exposed to more risk because that gap is likely going to try to fill, right? But you can see the strategy and analysis was on point. It ended up working. It was a partial gap close reversal, and there was no reason to buy puts at support. This is where I said to sell put options at 378. There was actually a very bullish doji right here at support. If you see a bullish dragonfly doji at support, that's an automatic exit on puts, and you can try switching to calls, right? And I said if it goes under 378 and has a massive sell-off, wait for it to rip back up, then try the puts at 378. Don't try to puts at 378 if it does not have the massive sell-off, which it did not have. Now, in terms of bulls taking control, as we had stated, if the SPY breaks above the previous closing price, if you see the SPY breaking above the previous closing price, and then it starts pulling back, if it bottoms at the previous closing price, or if it bottoms above the previous closing price forming higher support, then it is super bullish, and there's absolutely no reason for playing put options, right? So what we're seeing is we are beginning to see an attempt to shift the trend. The bulls are trying to shift the trend in terms of the SPY. So for the bulls to remain in control, what would need to occur? This is exactly what would need to occur. So it closed at $380.54. We're going to take $380.54. We're also going to take $380. That's what we're going to call the bull zone. That is the bull zone. The SPY needs to hold that, and it needs to stay above that. If it can do that, the bulls will remain in control. What are the next resistance levels that the SPY would be on track to if it can hold that support and break above today's highs and turn that into support, which is $382? If it can do that, heading into tomorrow and 382 breaks out, the next levels that the SPY would go to would be right here, which is a very, very important level. So take a look at this. This is 30, you're looking at 30-minute candles here, and this is towards 381 support right here. You can visually see at this 381 support, the SPY had a quick, massive move to all the way to $385. So your next level is 382.50. If it breaks above 382.50 and turns that into support, it's going to go to 383.30. If it breaks above 383.30, then it's going to 385, right? So those are your key levels, 382.50, 383.30, 385 in terms of the bullish case scenario. Now, for the bears, to gain back control. And the reason why the bears are losing control is because the SPY turned the previous closing price and the pre-market highs into support. To send a rocket, all the bulls have to do is just really stay above 381 for true strength. For true strength, if they can hold this 381, look, the rocket ship, this is the rocket ship. It's going to blast off. It's the $385 is your main next overall resistance level. The more micro levels would be, you know, that 382.50, 383.30, but above 383.30, it shoots up to that 385, right? So for the bulls to really flip super bullish, they mainly just need to stay above 381. That's what they mainly need to do. Now, in terms of puts and in terms of bearish theories, what would need to occur is the bears need to send this under 380.54. It needs to go green to red, and that needs to react as a resistance. They need to crack 380. If they can do that, then we're going to start to see some bleeding to 378. If 378 cracks, it goes to 376. If 376 cracks, then it goes to that 375, 374. What are the charts telling us right now? So inside of my private organization within Trader Society, I ended up swing trading call options on SPY when it was at $381. Those calls right now, in terms of extended hours trading session, I went with a December 31 strike. Those calls are likely to be up about 10% to 15% right now. So the reason why I decided to swing trade calls within Trader Society was mainly because of the daily chart. So if you take a look at the daily chart, let's visually look at the daily chart here real quick. So let's see. So if we go on the daily chart of SPY and we take a look right here, you can visually see that all of the, this had a massive sell-off. This went down for 5 days straight. It's due for a pump. It's due for a reversal. It's due to start to fill the gaps above, right? Santa Claus rally, the timing makes sense. It's due for some sort of move to the upside. What I like is I like an overreaction to the downside. Take a look. This is an overreaction to the downside. It starts to pump. It starts to consolidate, hold support, and then it pumps. The bears have basically failed for like 2 days in a row to crack 380, 378.30. When the bears start to fail to crack a support level and SPY is just sitting at support on the daily, sitting at support on the daily, sitting at support on the daily, after it had that massive overreaction to the downside with gaps to fill above, it's going to start to reverse. You got the bullish candlestick on the daily chart. There was a gap to fill below at 374. That's what I dislike about this trade, is because the gap has not filled yet. And it's very real that that gap can start to fill yet. So that it can reverse at some point and start to go back down to fill this gap rather than just shoot up to fill this gap at 390. That's another possible case scenario, which is why I'm not looking to aim for big targets. I'm looking to scale out basically vast majority of my position size towards that 384 to 385 resistance level. But those are the reasons why I decided to play calls. It consolidated at support for 2 key levels. We have the Santa rally in discussion. There's multiple gaps to fill above. It sold off for 5 straight days. It held support for 2 days. And the bulls attempted to really shift the trend today, because this is what the chart is really showing. If it breaks above that 381 and they turn the previous closing price into support and it kept going to 382, if it breaks above that 381, the bulls are going to show up and flip that trend like we said in yesterday's video, and it's going to start to rocket back up to 382.50 to 383.30, and 385 would be that overall last level, right? So those are my reasonings. That's my reasoning behind swing trading puts, along with the trust that I have inside of my private organization, Trader Society. Some of the most competent, successful traders that I've met and come across within that group ended up swing trading puts before it is that I did, and I looked at their reasoning as well, and I strongly agreed with them. So I'm deciding to take that trade. My max risk on those call options would be around $378. Right around that 378 would be my max risk. 378 to $379 would be max risk on that. If it doesn't work out, then I would look to rebuy calls for a swing trade at $374. If we see a bullish candlestick on the daily like this one, it's consolidating at support, then I rebuy calls at 374, right? So we went over the bull theory, we went over the bear theory, right? So just understand, the bulls finally had their first green day. They finally turned the previous closing price into support. They started breaking out. It's make or break, man. It's make or break for the bears. It's make or break for the bears. And the reason why I'm saying that is when you see a stock get absolutely destroyed and has gaps to fill above, if it's just sitting at support with bullish confirmations, it's make or break for those bears. If they cannot crack support with that overreaction to the downside, those bears will get squeezed. And if they hold, they're just ignorant. If it's, turning previous closing price into support and breaking above, you exit puts. That's the game. That's what you got to do, right? So basically, the bears need to quickly go under $380 and turn that into a resistance. If they cannot do that and they can't take out 378 very, very quickly, then we will see an overall bullish rally. If it goes above 381 holds, overall bullish rally to 384, 385. That would be the overall trend direction. Overall trend direction, it goes to 384, 385. Obviously, the lower levels before that, where it needs to break above and turn into support, are 382.50 to 383.30, then 385 overall, right? So that's how I see it. That's my analysis. That's how I see it in terms of, best levels to be trading at heading into tomorrow. $380.54. If the SPY hits that level, forms a floor, reacts bullish, starts bouncing, consolidating, forming support, you buy calls. That's what you're going to want to focus on. Buying the dip. The reason why buying the dip is because the bulls are trying to shift the trend. So buy the big dip. If there's a big dip, buy low. Buy the big dip low. Buy into the fear, right? Bulls have already shown that they're trying to flip this trend. I mean, just look at this chart. If they just hold above 381 overall, it's going to rocket. That rocket is coming. The big move is going to occur at 381 to 380.50. Make or break. But the bulls are already showing strength because they're breaking above and hitting 382 already, right? Flipping that move and having that first green day. So that would be the main opportunity and play for calls, would be at that previous closing price to that 380.54 zone. That's my main level in terms of day trading tomorrow. Another level to keep an eye on is this 381. If you see the SPY, say it goes red to green, and it flips bullish and it remains green and it's reacting bullish. If you see this 381 forming very bullish support at 381, that could be another opportunity to be scalping calls as well. The lower, the better for the calls. As of now, in terms of day trading, I have no interest in put options. And the reason why is puts have printed for 5 days straight. We got our first green day. It's showing signs of strength. Obviously, we have to see how it reacts in the morning because it could be a fake pump. But overall, I'm leaning towards the bullish side and I ended up swing trading those calls. But in terms of the day trading theory, for the bears to truly flip this back to bearish because they are losing control as it sat at support for 2 days, it needs to go under 380 and that needs to react as a resistance. And then it needs to crack 378. It's just very tough. It's overall very, very tough to be a bear at the moment because it's just so oversold. But you have to be careful in terms of being a bull as well because there is a gap to fill below at 374. And if we go under 380, it's really going to start to fill the gap, which would be the next level for the gap fill level, right? So level of interest for calls is 380.54. Understand if the previous closing price reacts bullish, then the bulls are in control. If it reacts bearish, then the bears really need to take out 378. But that's the overall analysis and thought analysis, right? So in terms of your upside potential levels, if we bottom at 380.50 to 381, we go to 382. Overall, if 381 holds, we're going to see a super bullish move to the upside. The key levels in terms of upside potentials would be 382.50 to $383.30 to 385. If one of those levels reacts as a support level, and SPY breaks above to the next level. If one of those levels reacts as a resistance level, then SPY drops to the next level. In terms of downside potential, the SPY would need to go under 381. If it goes under 381, then it goes to 380.50. If it cracks 380.50, the bears attempt to flip the trend bearish. If it drops under 380.50, then it goes to 379. If it goes under 379, then it goes to 378. Overall, the best levels that I'm seeing to trade at heading into tomorrow are going to be this $381 level to $380 in 2 cent level for the call option opportunity. Those are going to be the best key levels. Another big move, now those are support levels and those are dip buying opportunities. Another big move for calls is a break above 382.50. If you see it break above 382.50, it forms a floor, it forms support. If you see support forming at 382.50, scalp calls for the breakout. That's the breakout level. That's my thoughts. That's my analysis. Hope you enjoyed this lesson and learned a lot. I will see you guys within Trader Society tomorrow to continue the green streak.